Let's talk to Shaun Richards, Notayesmaneconomics. Morning to you, young Shaun.
Hi.
Right, this is soapbox session. Italy, you've got 6 minutes. Have a rant.
Okay, well, there's quite a few things to discuss and think about right now. Let's start with the sort of basic situation, which is the issue that we were supposed to be in a world whereby QE and things like that had ended issues with the bond markets. The game was over, everything now in the future would be incredibly cheap. And then suddenly we've found this week that there's been a complete change. That in terms of yields in Italy, we've seen the 10-year go above 3%. Rather, yesterday, even more so, was an absolutely extraordinary day in the 2-year. Because that's supposed to be, in effect, sort of pinned down in negative yields with a deposit rate of minus 0.4. And what did we see? It went over 2%, 2.8, I think, at one thing. So today looks better, it's better at 2. But Italy now faces itself in a position of what happens next. European Central Bank, can it step in? In many respects, no. Because for it to step in requires a deal with the government, and Italy hasn't got one.
Yep.
Or at least it officially has one, which got no power to do anything. And of course, those that were voted in that could run a government, because they've got the seats in the parliament to do it, have been excluded. So it is quite a mess. And this spirals round in a lot of areas, because if we throw in something else, the next issue is right now that it looks like economies in Europe are slowing.
Yep.
And this is the real issue here with Italy. If we look back to the whole Euro era, it hasn't gained anything. It may have just, in the recent growth, the ordinary person's got back to where they started, maybe. And so this is the fundamental problem. It's quite a mess. They've run around for a few years and said that they've solved the issue with lower interest rates and that sort of thing. But now it's a bit like the Terminator saying, I'm back. And so that's where the sort of situation is now. And there's been an actual cost this morning because Italy's issued some bonds and had to pay 3% for the 10-year. It got used to a lot cheaper than that. And these sort of things governments already have in the numbers. This is something that doesn't matter as to who'd be going forwards, be it the IMF guy, Mr. Scissors, be it Beppe Grillo, whoever. Everyone always takes the sort of better figures and assumes that when they do it happens here, it happens in the US, everywhere. So there'll be quite a few changes from all of this. And this is before we get to other issues like Italy is a nation of savers, so they've just lost money in the bond market between them collectively. Same with the stock market, ditto, nation of savers, they've just lost money there. And where do we go next? What about the Italian banks, which already were in a dreadful state with bad debts? And it was only, a year ago that we were going through the phase of people were buying the bad debts and Monte Paschi and things like that. Well, how does that look today? Looks pretty dreadful, I'd imagine.
Agreed. Yep.
And so this is where we find ourselves. This is those that have seen the social media feeds this morning. I think it's JP Morgan coming out saying it thinks the Italian bond market doesn't match fundamentals. What that means is they've taken a complete bath, doesn't it? Long and wrong. And so this is where we stand right now, and we're sort of waiting for what happens next.
So, what does happen next? What's your best guess?
I think the elections have to be soon. They seem to be getting nearer. It started off that he might be able to hold them in January, then September. Now he's saying July. It'll be next week at this rate. Now, I doubt actually if they can do them that quickly. But I don't think that they have any choice and to try and find a government and then move on. I think the most awkward thing of all, I suppose, would be if these two parties come back stronger and they send the same bloke up again as finance minister. Because this time around the president can't really say no, can he?
So, the euro under huge pressure, strength of the US dollar. What are your thoughts on the euro currency?
Well, the subplot here, of course, is the other way. If Italy's out the euro's stronger. So I don't think that the thing of we might see phases where the euro gets hit. In fact, we have seen some of that this week. But once people sit down and have a longer think about that, euro's stronger without Italy, isn't it? Now, of course, there are a lot deeper questions of whether that would actually break the whole thing up. But just as a simple concept, if you drop a nation out, drop out one of the weaker nations, it's stronger.
But Italy is 10 times bigger than the economy of Greece.
Yeah, and this is one of the issues here of how they try and sort of dig their way out of this, because in a sense, the odd part of the Greek issue was it was all containable. and the issues of funds and money around Europe, they could easily have dealt with Greece. They decided to punish it first, and then by the time a year or two later they U-turned and then tried to help it, it's too late. Things had slipped away. But they could have contained that. The trouble is with Italy, like say its debt, which is, I think last time I looked, somewhere around 2.2 trillion euros, it's a bit too much for that. And that's the problem, taking that sort of issue back to German taxpayers, saying, we're bankrolling this, it's not going to go down very well.
Yep.
And so that's the problem on the other side. And of course, in all of the European things, I mean, one of the things that the UK, I think, has handled badly recently is issues like the European Investment Bank. It's loaning money everywhere. Now, for example, it thought it was entertaining to loan in Turkey. How's that going? Well, imagine how that works out when you're trying to exit the UK from it, maybe exit Italy as well. Be very, very difficult, because no one ever wanted to figure out these things as something that was losing money.
So, final thoughts.
This will carry on now, I think, through most of the summer. Each point, and I mean, there's already been about 3 different versions, I think, of the proposed coalition government today. And I think that sort of thing will go on, and markets will swing around. I don't think that, I haven't seen moves in bond markets, and a main one like we saw in Italy yesterday. It's back in the days when Moose and I were on the live floor. And even then it wasn't very often, was it?
On that note, thank you very much indeed.